Today, we're talking about real estate, but forget the condos and the office towers for a minute. We're diving into one of the most overlooked and, frankly, one of the most profitable corners of the market, marinas. We're going to look at the powerful infrastructure that really drives the blue economy. So let me ask you a question. When you picture valuable coastal real estate, what's the first thing that pops into your head? Probably a huge beach house with those incredible ocean views, right? Or maybe a luxury high-rise. Those are the obvious answers, but what if they're not the best answers? See, here's the thing. The real value isn't just in looking at the water, it's in servicing the water. That beautiful view from a beach house, it's a passive asset. It's worth a ton for sure. But the infrastructure, we're talking the docks, the ports, the services, that's a whole different ballgame. It's an active, high-yield, revenue-generating machine. And that's what we're digging into today. All right, so let's push past that typical image of a beach house and really explore what makes these waterfront operations such incredible cash-flowing assets. The big mindset shift here is to stop thinking of marinas as just, parking lots for boats. They are so much more than that. These are complex commercial properties, basically full-on businesses with all these different, reliable ways of making money. You've got docking fees, fuel sales, maintenance services, even retail shops. So no, not just property. These are high-performance engines, constantly spitting out cash. Okay, so I'm calling them high performance, but what does that actually mean in terms of numbers? Let's get into the hard data because this is where it gets really, really interesting. And you'll see why this asset class just runs circles around other types of real estate. Get ready for this. The best marinas, we're talking prime spots in Europe, are kicking out net operating yields between 7 and 12%. Now, if you know anything about real estate investing, you know that number is absolutely insane in today's market. That's a phenomenal return. And that incredible yield, it's built on a foundation of just unbelievable demand. Occupancy rates are almost always over 95%. But here's the truly wild part. For many of the best marinas, the waiting lists to get a spot are decades long. I'm not kidding, decades. Can you imagine that level of demand security? It gives them pricing power that other property owners can only dream about. And this chart just lays it all out, clear as day. Look at the marina infrastructure yields right next to your traditional commercial real estate, office buildings, retail spaces, which you're chugging along at maybe 3 to 5%. It's not even a close race. It's a completely different league. So what's feeding this fire? Where is all this demand coming from? Well, it's not just one thing. It's kind of like a perfect storm of factors. You've got the global population of ultra-high net worth individuals growing. And guess what they buy? Yachts. You also have more and more people moving to coastal areas, and tourism is bouncing back in a big way. All of these trends point to the same thing: more boats on the water, and every single one of them needs a place to park. Now, you're probably asking the logical question. If demand is this high and the returns are this good, why don't people just, build more marinas? And that question leads us right to the absolute core of this whole investment idea, something called an economic moat. So, what's an economic moat? Well, think of a medieval castle with a huge, deep moat around it. It's almost impossible for an army to attack, right? It's a structural barrier. For a marina, that moat is made of something even tougher than water and stone. It's made of geography and red tape. This right here, this is the fortress wall. It has become nearly impossible to build new marinas in the places people actually want them. You have to fight through a jungle of strict environmental permits, rigid coastal building rules, unbelievably long and complicated approval processes, and on top of all that, you usually have local communities fighting you tooth and nail. These barriers are what protect the existing marinas. They make competition almost non-existent. This all sounds fantastic, right? But for most of history, an investment like this, buying a piece of a marina, was completely out of reach for pretty much everyone. But now, technology is changing the game. Let's see how new ways of financing are prying this asset class open for a whole new world of investors. The technology that's unlocking this is called tokenization, and it's actually way simpler than it sounds. It works like this. First, a top-tier marina is picked out. Second, the ownership of that property is divided up into thousands of little pieces, called digital tokens. Think of them like digital shares. And third, those tokens can be bought and sold by investors anywhere in the world. It basically takes this huge, illiquid building and makes it divisible and tradable. And look, this isn't some futuristic theory. It is happening right now. Take this example. A marina on the beautiful Adriatic coast used this exact method to raise 28 million euros. But what's really jaw-dropping is that it took them less than 6 weeks to do it, and the money came in from investors in 14 different countries. That is the incredible power you get when you combine a rock-solid real asset with modern financial tech. Okay, so we know what they are, we know why they're so valuable, and we know how people are starting to invest in them. But how would you actually figure out if a specific marina is a good investment? Let's pop the hood for this last section and look at the key numbers that the pros use. You really only need to know 3 core metrics. First is berth occupancy. Pretty simple. It just tells you how full the place is, a direct measure of demand. Second, and this one's cool, is revenue per linear meter. This tells you exactly how good the marina is at squeezing money out of every foot of dock space. And third is the dry stack to wet berth ratio. A higher number of boats stored on land in dry stacks is a great sign that the marina can charge premium prices. And here is the final piece of the puzzle. Even with these amazing returns and high demand, these prime properties often sell for about 8 to 11 times their annual earnings. But here's the crucial part. Even at that price, they are often still cheap compared to what it would cost to build a new one from scratch, which, as we already know, is basically impossible to do anyway. So I'll leave you with this final thought. We know that something like 90% of all global trade moves by sea. It's the lifeblood of our economy. So it makes you wonder, is it possible that the most secure, the most resilient, and ultimately the most valuable real estate isn't actually built on land at all? Maybe it's built on water. Something to think about. Thanks for tuning in.